Hi everyone, my name's Tashi Dorjee, a startup enthusiast, newly dubbed father, and the head of Flex for Australasia at JLL. Today I'm going to be your host for the Unpacking of APAC mini-series. It's an exclusive series at This Week in Coworking, where we're essentially going to look at what makes Australia tick from a future of work, office, and a co-working perspective. Now, a quick word from our sponsors before we get started. Office R&D Flex. It's the ultimate platform that helps co-working and flex spaces streamline operations, wow their members, and grow faster. Learn more at officernd.com/flex. Syncaroo. Now, Syncaroo keeps your best people unblocked through managed integrations, profit-protecting automations, and understandable tech guidance. Hop in and learn more at syncaroo.com. Ascensus. Ascensus is a global provider of software and technology for commercial real estate, helping the world's leading landlords and flex workspace operators deliver seamless digital experiences. Head over to ascensus.tech and let them know we sent you. On this episode, we're going to be diving into the psyche of an investor and landlord. Today, we'll be talking to Tanya Lambert. She is a seasoned property professional with 25 years of experience across Australian markets. Most recently, she spent 5 years at 101 Collins Street in Melbourne as the Senior Asset Manager at AXA Investment Managers, leading its refurbishment, repositioning, digitisation and electrification, making it the 30-year-old fully electric asset in Australia. She and I also collaborated for over 3 years developing a flex workspace solution for that building. So Tanya, you just saw Malcolm Turnbull, is that right?
Yeah, in the street, just on his own.
Did he
randomly.
seem like a normal human being, or?
He was, yeah, he seemed quite frail, but he was just, didn't think you could just walk down the street. Didn't you have to have people with you?
Security and all that kind of stuff. And
Yeah.
that's pretty funny. You threw a huge curveball at me because I was like, oh, you know, how you doing? And you're like, I just saw MT.
Turnbull in the street randomly.
That's really funny. Thank you for joining us today. I'm personally really excited to talk to you because, you know, when you talk about the future of office and the future of work, we hear a lot from, you know, flex people like myself, from people within the tech space, from tenants, from brokers, but everyone's fascinated to hear from like an asset manager and their psyche and how they look at it, because we see a lot of new developments and redevelopments happening. And how do you plan for something so that you know it's going to be relevant even in 5 years time or 2 years time by the thing's ready? So having you on is super, super important. So thank you so much for your time.
Thank you.
And I'm going to start with your thoughts on the elephant in the room in many conversations, and honestly, the North Star and the driver for a lot of decisions when it comes to assets, and that's how do you value an asset, or the asset valuation process, or from your experience and the assets that you've had to develop and elevate, what did that look like and how has that changed?
Yes, it's been heavily disrupted for the last, 5+ years, since even before COVID, things were changing. And what we're seeing is that more and more assets are introducing different income streams that might not be a typical fixed lease contracted income, which was very safe, very easy, passive, bond-like investment from an owner's perspective. And that's shifted now because we've got to work a lot harder to pull people into our assets and keep them there. So that means thinking, dreaming of what is that next thing that is going to be the hook to create that stickiness. And that means we're seeing, income streams from flex space operations, from wellness, from F&B that might all be slightly disrupted in terms of not being under a fixed lease, some kind of management agreement or share of revenue, which historically the valuers, struggle with that sort of non-proven income. How do we treat that? But I think what we're seeing now, as there's more and more case studies in the market that are coming across their desk, they're getting more comfortable with understanding the value that some of that can actually bring. So it might be more risky, but if you can deliver as a landlord something that is genuinely super useful for your occupiers, for your customers, that they want and they need, then in actual fact, whilst on its own 2 feet, it might not be the most profitable part of your income structure. In actual fact, at least renewal time, you've delivered something that's of great value to them, which means that the renewal probability is higher, the incentive is lower, the rent is higher, all of those sort of upstream, value creation, aspects that flex space and wellness space can bring. And so, yeah, the valuation methodology has shifted, but I think it's also stabilized now that the valuers do understand what to do with some of those more tricky income streams.
Yeah, I feel like the sentiment definitely has shifted. So 5 years ago when I first joined JLL, it was almost a very taboo conversation because they're like, what? You can't guarantee this income, even though you could forecast it to hit a rent. It's not proven because valuers like to work off historical data, not
Correct.
forecasted. But even speaking with the valuation team at JLL, they're all for it, especially if it's under a certain quantum of space for the asset. You're not being hyper bullish and saying half of it's going to be under a variable income kind of arrangement. So on that topic, if you look at a flex or even a wellness operator kind of pitching you a management agreement, as an asset owner, what are you looking for in order to take that risk? Like surely there's a bit of tug of war going on there. You don't just say yes and let them do what they want. There's a certain expectation.
Well,
right?
yes, and I think that's also that stems back to the other disruption in the industry really, which is that historically your occupiers, they just needed 12 square meters of space. They'd build some meeting rooms, they'd have a breakout space, and that was it. And that's not the case anymore. So they're having to work harder, and so is the landlord. So as the landlord, the risk we might take with partnering with a flex operator is greatly mitigated if you've done the research, not just once, but a few times with your key customer base to find out actually what they want, where are their pain points, and what could an amenity like this solve for them? Because that's really, as a landlord, what you're trying to do always is keep the occupiers, your customers, as happy as you can possibly keep them. And I think that also then dictates how far up the risk spectrum you move as a landlord. Like, are you just handing over the floor to an operator to run their business as they see fit? Or have you calculated that the demand within your asset is such that you actually want to make it inward facing? So not for members of the public, it's going to be exclusively for the use of your tenants. So that in theory, it creates a little bit more risk because what if they don't use it as much as they said they were going to use it? But there's still strategies around mitigating that. You can say, well, 2 years we'll have it exclusively for, the internal customers of the office tower to use. If the demand is, not what we thought, then you can sort of selectively create by bringing in, external customers. So you can't delete the risk, but you can certainly manage it and have a comfortable feeling in your own mind about what that end business is going to look like and from an income stream. And I think if you've done the research to find out what your customers are asking for, and that just, I guess, stems back to the much more active partnership that we have to have with tenants these days. And they don't know half of the time what space they really need. We're 5 years post-COVID, and I don't think it's not played out yet. We've got another 5 years to go before everyone really settles on what their office should be. And by that I don't mean just how much space, but what should it actually do? What do you want it to do here? Because we don't need to go to offices, any of us anymore, to do our work. It traditionally would facilitate your work. It had the equipment you needed, the technology you needed. That's not the case. So what is individually for each employer or occupier, what is your office supposed to do? What do you need it to have inside it to run your business for the people that you employ, and what do they need? And then I guess the landlord needs to sort of lean into that and work out how then the landlord supports them. Counterintuitively, we don't want tenants to take more space than they need because people come into the office, there's a sea of empty desks, it's a miserable experience, so they don't come as often. So you have...
Yeah, right. That's a really interesting way to...
It's a fine balance.
Yeah.
Obviously, a key strategy as a landlord hasn't changed. We need to make money. We need to fill the buildings. But if you've got, an occupier that's just, is not in the right footprint, then they're having a miserable experience. They don't understand why people won't come in. People do come in, they don't see anyone they know, and they're not going to come in.
That makes so much sense.
And then your asset is not vibrant. You need your asset to be somewhere that's buzzy, that everyone wants that. So it's a very tricky balance, and the tenants are still trying to work out what that looks like for them. And we're in a lot of them are finding it very hard, hence the return to office mandates that you see, which, some businesses will benefit more from being together, creatives, etc., benefit more from being together. But a lot of other industries, they don't need to be together all of the time. But when they are, it should be intentional and curated, and purposeful. And that's a big piece of work for occupiers, which is why they're still struggling with what their footprint should be, what it should include. If the landlord can support that by saying, look, you don't need to build your own event space, 8 times through the building, through various occupiers that building might contain, we'll build all of that, which can be another revenue stream. It's building by building, occupier by occupier, and that's why it's hard.
Yeah, it's definitely a bespoke process. And an interesting point that you made that kind of lit a light bulb in my head just a moment ago was that you want tenants to take the right amount of space and not too much, which may sound counterintuitive, but it's the right approach because you don't want them to have a poor experience within their own tenancy, which then impacts their employees' experience, and therefore they don't come back into the office, and therefore the knock-on effect is they don't need the office, and therefore you lose that tenant.
Yeah.
It really resonates because we did a podcast with Gardy, who's a hotel owner previously, and a trend within some of these premium hotels and even the ones that he owns and buys is that once upon a time, counterintuitively, it may seem, some of these hotels had these really grand lobbies. So when you enter, you're like, whoa, right? But now the future is that actually creates a poor experience, aside from the wow factor, from an activation, a connectivity, a human experience angle, because it's too vast that you can't really facilitate any form of connectivity within there. So there's this trend of kind of compartmentalizing that foyer, that lobby, into, instead of having this massive grand thing where everyone gets to go, wow, there's purposeful areas meant for different things so that there's a use for it as well.
Yeah.
So it's kind of sounds very similar. It's really funny how hotels and CRE, commercial real estate, are different but facing similar kind of experience issues within their own assets, and there's going to be this kind of meeting of the minds, I suppose, especially with these multi-purpose or multifaceted developments where you're going to have hotel, retail, flex, office. I feel like there's going to be this evolution of shared floors where you service both customers.
Yeah.
And you learn a ton from it.
Yeah.
Right.
I mean, I definitely see that. I mean, as a commercial office owner, if you're not threading, hospitality-led amenity through your asset, then you're going to struggle from the get-go. And there is a definite blending of those two industries, which we've seen, this is not new.
Yep.
And I do see that continuing because the hospitality industry has the skill set within it that the commercial property industry needs. So there's going to be more and more collaboration. There is already some. And I think to an extent, the industry probably needs to reskill. There's certain areas that are now redundant. AI will do it for you. And other areas where it's very difficult to, deliver on some of the service that's needed because, you don't have that skill set within the industry. And I think more and more the property industry will attract people from very different disciplines into their leadership roles, into, I'm not from a property background. I fell into property by accident, really, from a social sciences background, which was something I was really interested in, didn't really think I'd ever use. And then suddenly here I am.
Yeah, it's perfect.
Decades later going, actually, that's really useful to have a good understanding of what makes people tick and what they want and how you can find that out. So it's an interesting journey, but it's an exciting time to be in.
It is really exciting. And, whenever I had the privilege of working with you and collaborating on projects, I always thought you were definitely one of the few forward-thinking asset managers whenever you thought about your client, the fund, and also your building. Because to your earlier point, just because you have a premium asset, if there isn't hospitality or flexibility or amenity ingrained through it, you can't just rely on that location and that building.
No.
Because even a bunch of assets that we've worked on and delivered flex on behalf of the landlord under a white label arrangement, a lot of them got converted into realizing they needed hospitality and flexibility because they would be building this beautiful building, even if it wasn't CBD, it was on a fringe location. And they were like, oh, because we're spending the most money, it's the best building, it's just going to fill up with tenants. And this was 3-4 years ago. And they kind of got backed into a corner to defensively look at those offerings because all the major tenants were like asking, okay, what kind of flex do you have, or what kind of hospitality operator do you have? Do you have a rooftop bar? Do you have a cafe in the ground floor? Do you do catering so I don't have to put a commercial kitchen in there? You know, if I need some swing space, can I use it? So it's almost like, and that was 3 years ago. It's almost like even today, every new development I look at that comes across my desk at JLL, whether they do it or not, eventually there is definitely some strategy or thinking around what do you put into the building and how does that ensure that you fill the building, and therefore, even though you're, I guess, carving out a small piece of that asset's valuation for those amenities, it helps underpin that valuation because it's going to help you fill it.
Yeah.
Right. And I think it's really cool to hear that your background, you know, you had that social experience and all that kind of stuff, because I really do think it's important because it means that you're opening your mind to different frames of thinking. You're not just thinking in terms of square meters.
Yeah.
Like less impressively or cool or related is I'm actually a biomedical engineer by trade before I got into co-working and flex.
How did I not know that?
Probably because I don't particularly want to share it, because, you know, when you think of a biomedical engineer, you think about some pretty weird bionic stuff.
Pivot. That's like a
full change.
Yeah.
Well, it's kind of because like you know, coming from an Asian background, it was like, you need to be a lawyer or a doctor. Out of uni, I was like, I don't really have the grades to be a doctor, but I can be a biomedical engineer because it's like hearing aids and hip replacements and stuff. But I learned a lot about problem solving and building things and engineering stuff. So I'm fascinated in test fits and floor plans and flex and how everything has a purpose, right? So that's kind of how that discipline trickled into co-working and flex. So an interesting question is, you know, you were kind of already touching on it when you were talking about tenant certainty around their office needs and what they need. And there's definitely been a shift around, how many square meters do I need per person or per employee, and how the dynamics, even within the tenancy, even if you right size it to what they need, looks like. You know, in your experience more recently, have you seen anything interesting happening within office tenancies or within the building that you think isn't as common as it should be and it should be embraced more?
I think some occupiers are really getting it now as to how they've got to create this incredible experience for their staff. And, you know, your offices, JLLs in Sydney and Melbourne probably talks to that.
Yep.
I see a lot of occupiers who still, I mean, it's great from a landlord's perspective, you know, we just renew with them on the same footprint and they'll continue operating exactly as they've done for the last 10 years.
Yeah.
But yeah, a lot of occupiers not really getting their head around that piece of work. That is, what is my workspace? What does it need to solve for? What does it need to do?
Because... And how do you think they even get to what do we need to, is it like speaking to their employees? Because you made a really good point earlier in the podcast. I forgot to bring up how sometimes tenants don't know what they want, or their employees don't know what they want.
Yeah.
So whether that's an element of market research, it's an element of courageous guessing to a degree of what you think as an asset manager or owner, you think the future's going. So you take a little bit of, I guess, I think courage is the right word, willingness to try and do something that you think tenants will need in 5 years' time, because no one may be asking for it or they are asking for it or whatever. I think there is an element of experimentation there.
There's definitely some elements of, you know, being brave from the landlord's perspective, for sure. It's some of the sort of amenity that we're trying out, you know, because there's not a business case for it, but intuitively, you know, people are going to enjoy that. You know, I think back to, I had an asset in Perth with a vacant rooftop, and we're like, I think this could be like a community garden or something, which was a bit out there for Perth. Yeah. And it didn't require a huge amount of capex. So at the time, my fund manager was like, okay, well, yeah, we'll do that. And we created this amazing garden with the tenants could tend their own little plots, and we had beets.
Oh, that's cool.
And there was there's produce that you could distribute amongst the tenant. Like, it was just, it doesn't talk to everybody in the building, but understanding that there was a demographic in the building that would really enjoy that, you're resonating with them. And I think that's the key thing from a landlord and an occupier perspective is, don't assume that all of your tenants want the same thing. Don't assume that all of your employees want the same thing, because they don't. Historically, that's exactly what happened. You're all treated the same. You all went to the same little spot to do your work. So understand who, whatever your industry is, it will dictate, the demographic of your worker, within the business. What do they need? What will resonate with them? What do we need this space to help them? How often do they need to be here? Really ask yourself that question. When you're dealing with grads that need to have that mentoring experience, totally understand that they should be in more often, but it should also be more intentional that when they're there, and more purposeful, the mentoring that they get, as opposed to accidental learning through osmosis, which can often be the case. So yeah, there's a lot of research that you can do that's, which, I've used in the past to really understand, down to, a lot of them use mobile phone data to know where people live, and then you can understand more about their demographic, what they're likely to be wanting and needing. So it can be done. It is hard work to try and, but that's how you, to your earlier point, how you start to de-risk. But a lot, it's a lot of work for occupiers and landlords. So
Yeah.
in some instances, the easiest thing is to say, well, let's just return to the office and it will go back to how it used to be.
Yeah,
It's
yeah.
what we're seeing every day.
Yeah. I mean, it's funny because and I can't speak for every city, obviously, aside from data that I look at, but at least in Sydney and Melbourne, whenever I go to the office, it's packed.
Yeah.
Like we can't even get a desk anywhere. And
Yeah.
lucky for me, when I did one of those behavioral tests, I'm the type of person that likes sitting around noisy cafe
Yeah.
areas. I like hearing the coffee beans being ground, so I always work in that area and don't necessarily
Need the quiet time. Yeah.
needed the quiet time, so it works for me. But it's getting super busy.
Yeah.
And the funny thing is that I'm seeing more and more, even though the space is clearly a vehicle for human interaction and the design's important, it's almost there's an element of people taking it upon themselves to find a reason to come to the office through social interaction.
Yeah.
So whenever I see the office being super busy, people are having lunch communally now. I used to see, even from a JLL agent or broker perspective, or my team, us eat in isolation because we're just trying to slam through work or slam through inspections in their case. I kid you not, over the last 3-4 weeks, I've seen like people eating in groups of 6 and 8. It's like, it's so weird. It's almost like, and the furniture and the fit out has not changed. It's always been there. The communal yum-cha style big round table, like the long tables. I just feel like people are making that effort now. It's almost like, to a degree, a lot of these spaces can help facilitate it, but maybe people are just getting tired of coming into the office and doing their work and feeling a bit lonely, and they're making a bit more effort.
Yeah.
Right now, I don't know.
So I forget who said that the opposite of addiction is not sobriety, it's connection. So the workspace, the workplace still has that purpose of bringing people together. I think it's important to address what they should do there, but it does have inherent value. I think a lot of what I am seeing in terms of workspace design, and this is again, it's sort of not new. It's sort of, we're 5 years in now. It's just getting bolder and bolder and bolder. Is designing offices to be more like your home. So that it's different finishes. I mean, it used to be pretty bland back in the day. It's technically a desk. So now occupiers are building spaces that people would want to spend time in. But I think, that obviously the purpose of our conversation is the value that having an element of flex space, in the building to support that is really crucial. I mean, to your point, your offices are now full. So what happens then?
I keep nudging leadership. I'm like, hey, let me know if you want to deliver some flex in this building on our behalf. Let's lease half a floor and I'll do it. It's something I've been teasing them about, and they keep telling me to go away. But it is very interesting right now, because to your point where it's like, some of these design things that you're seeing or you're describing is already 5 years in, but it's getting bolder and bolder. It's fascinating because when you look at the delivery timeline, especially for some of these newer assets, you need to like front run where you think the market's going to be, right? Especially if it's happening in 5 years' time. So whatever you're like, and I'm going to propose a bold question to you right now. And obviously you don't need to give me a detailed spiel, just even a vision or like what you think could be. If you were like kind of looking at an asset to the future in the next 5 years' time, and to what we were speaking earlier, flexibility and amenity is really important. Is there a particular key component or a key feature that you think it's just got to have if it's going to be competitive, especially it's a premium premium offering? And you don't have to say flex, just because I'm here.
I think the F&B component, like food and beverage, is really critical.
And when you say food and beverage, we're not just talking about chucking a cafe retailer on the ground floor or something.
It has to be very carefully curated. And obviously it depends on the size of the building, but if it's a new development, I'm assuming it's big. So really understanding that. And the challenge in development is to get the feasibility to stack. There's rents applied to those retailers that in reality, sometime later, are not really achievable. But I think where the opportunity lies, if the REITs especially can get their heads around how the office fund and the retail fund need to work together, because if this is not working at the bottom of the building, then the stuff upstairs doesn't work. So it has to be, the income around the bottom from all of that amenity, the F&B, whatever else you're going to put in there is ancillary to the end game, which is filling the office tower and keeping it full. So I think, to my earlier points, what will be the most valuable, it really is going to depend on, who your anchor tenant is, what they're likely to want, what's in the locality, that if you're building in an area that, which we'll see more and more now because there's less and less space, that perhaps hasn't got as great amenity around the outside of it. So I think if, to answer your question, the placemaking piece of any new development is super critical and often does not happen to the extent that it should. Having the sort of ongoing management team really involved in some of that development stuff as well in terms of design is also useful, and also often does not happen. So the development team will deliver and they hand it over, and then the team that's got left behind to sort of make it work, that could have had more input into some of the areas of the design and delivery. So collaborating a little more in that space, just because it is more risky now. It didn't used to be that risky. I mean, there was the risk around cost of capital or the leasing market per se, but it wasn't that risky in terms of if you built a premium asset with a very impressive lobby and lots of nice sized office floors that were easily split, then it was a safe bet you were going to fill the asset. And now that's definitely not the case, which I think the industry is recognizing. So it means that as an occupier ourselves, we get a better experience at the end of the day, because it has to be worth our while to leave, do the commute, pay for the commute. When we get there, it has to be that experience that is worth it.
Yeah, and I think whenever you look at some of these, I guess, experiences and amenities, whether it's food, whether it's flex, whether it's retail, that maybe requires some element of support because it's not just under a lease arrangement on the ground floor, or it's providing a bespoke experience to the building. 5 years ago, even 3 years ago, the way that it would be communicated upstairs, or at least I'd have to do it via fund managers or asset managers, would mainly be through the soft-driven benefits of it's going to help your building, which doesn't really help when you're trying to get something approved because there's no commercial, I guess, measurement for that. But I feel like more recently, both from an asset owner and a fund manager's perspective, I think there's more numerical measurement for that kind of stuff, whether it's reduction of downtime or anything. Are you seeing, or do you look at certain things when you pull together that business case on how you measure that impact on the asset versus it'll be good for it?
Yeah, I mean, for the most part, hopefully whatever that amenity is that we're trying to get approved, it at least washes its face. That would be the start point. And then the upside from there is that, we know if it's delivered as we plan, that it will, and the tenants engage with it, that then does absolutely convert to higher renewal rates, less downtime, higher rents, lower incentives. So there's, it can be difficult getting the first one across the line because it does take a bit of time for that to play out. But I mean, there is, I think to my earlier point, there is enough case studies through the industry now to sort of show that it really does work. And to go back to the beginning of our conversation, valuers are getting their heads around that too, that it might not be a fixed income stream that they can see, but the evidence speaks for itself within the asset that it's got a higher retention rate than its competitor set. So the strategies definitely work. I mean, just on the face of it, if you're delivering some of these experiences and amenities that are, aspirational, fun, whatever they might be, how is that intuitively not going to add value upstream? It just does.
Yeah, because and this is even this conversation. Even I'm lapping this up, even on a personal perspective, aside from shooting this podcast, because I find it fascinating. The 5 years I've been at JLL, I've probably spoken to a valuer across the last 4 years, maybe once or twice. Now it's almost like every week, and it's not me annoying them, going, hey, can you help me value this? It's them asking me questions because they're seeing more and more developments where a flex operator is going in there, or they're considering doing it themselves, but they need help understanding, even though it's under a variable income model, historically how have they performed, or what do they think the value proposition of having that in there. They're really trying to figure it out and do it. And in the past, one of the flex spaces we delivered 3 years ago, the way that valuation was measured back then, and I forget the valuer, but they essentially took the forecasted income that we were meant to hit, which was essentially a slight premium to the market rent because there's a premium attached to flexibility. And this was across maybe circa 3,500 square meters of a 20,000 square meter asset. And they took the value of the floors that we were forecasting to hit that slight premium on rent at a 15% discount to a traditional lease. But they would revisit it every year to see if we were hitting our targets to then look at that valuation again. And happy to say that we've been on track. So hopefully that can be shared wider within the valuer community to start looking at some of these other projects and opportunities to put that in a good light. You know what I mean?
I mean, and once there is more case studies, and they're definitely getting more comfortable. I mean, valuers are a conservative, dry bunch normally, and they don't like crystal balls.
No,
they
don't.
Hard evidence.
But it's a giant crystal ball right now. It's like who knows where office.
So I mean, they are being tested, but they're getting their heads around. There's a myriad of ways that you could treat that income, and that's why you need to have a very good relationship with your valuer.
Well, because the call I got was like, hey man, there's this really cool new development in X area in Sydney, and there's a deal with an operator that's a 10-year deal, right? And I'm like, and my honest answer was like, yeah, looks good, but who knows what's going to happen in 10 years time, 5 years time.
Yeah.
Like, look into key things like, are they going to refresh their fit out? Is the landlord going to cover that? What are their numbers? They're going to have to expect a pretty high, office or desk rate to hit the rents that they're trying to hit, even though they're super premium. But the real question is like, who knows what's going to happen in 5-10 years? And anyone doing a 10-year operator deal is wild to me. But
well, I mean, and we see the same from the occupier side. Just like, I don't know how I mean, it's great that you're signing a 10-year lease.
Yeah.
How do you know this is going to, how do you know?
Yeah, you don't.
So, and I think that will, I only see that whole process snowballing.
Yeah.
See, if the landlord managed controlled amenity is currently, this much out of your building, over time, I think it's going to get more and more and more. And so as a investment class, that's changing the goalposts significantly. So it's not going to be for everybody anymore.
Yeah.
It'll be much more active investment because these tenants will realize that they can't really sign a lease for 10 years.
Yeah.
So, the fixed income streams will get shorter. I mean, we already have to deal with break clauses within leases, so which it's actually quite rare that it's not unheard of, but it's unusual for them to actually be used. But we accept that is part of the landscape now, that they'll need more flexibility, within their lease structure, within the building in terms of how they could dip in and out of landlord managed amenity. I mean, you used the example earlier of the commercial kitchen, which, as you know, we worked on a project together where that's exactly what we were planning, which actually can have a very strong, attractive revenue stream for the landlord. And it makes perfect sense because there's, if you've got a building full of, law firms, etc., they're all building their own internal kitchens. It doesn't make any sense. Just, I mean, in some instances they do it so often it probably does, but for the average tenant, it's like, well, just contract into our services when you need them, and you've got that floor space back to do something else with. So it just seems more sensible way of using space as well.
And to your point, like the food and beverage in that scenario was very well thought out, to the point it was with a partnership with an operator who could do seasonal menus. It wasn't just having an operator on the ground floor that would do the same cafe menu.
No. Well, it was a different beast. It's
different beast in itself.
Most premium asset in the country. So
exactly.
They definitely don't want a sandwich platter from the cafe.
No. So, one thing I found, like helping answer the uncertain office strategy for a lot of large tenants, that the white label flex arrangement really works, and we're having a lot of conversations around it now, is, and for any operators out there who are willing to venture into this, albeit I understand your measurements of success are a bit different to mine, is under a management agreement, let's say, taking 4 floors and running a flex operation with commercial targets, but then having the malleability and the flexibility to hand back space once tenants ask for it. So rather than just have 4 floors in the perpetuity of that 5-year management agreement or operational partnership, or 10 years, be ready for that to shrink to 2. Because the owner's going to be like, thanks for commercializing that hibernating space for us, but the tenant upstairs who only took 4 floors finally needs their 5th and 6th floor or another half floor, and they're willing to take it under a traditional lease, so that thereby they reduce their exposure to the management agreement as well.
Yeah.
Like, we're finding that's the reason why my phone's ringing, because we're offering that level of flexibility, which may not be attractive to a traditional operator, because then it's just a headache. It's like, I'd rather have my space, monetize it. But it's the frame of thinking that I think really is required if you're asking to put all the risk onto the owner.
Yeah.
If you're going to ask that management agreement. So I think a really good way to close this off is that, from our conversation just now, it's not getting any easier. Asset strategies are getting tougher and tougher and more difficult. And many owners don't just have 1 or 2 assets, they've got a portfolio. So portfolio strategies are becoming increasingly important. How do you think someone should approach their portfolio?
You're right that the industry is much more difficult right now, as we've touched on. It's difficult for occupiers to figure out what they need, landlords to manage their risk in a more risky environment of less stable income streams. We see a lot in the industry portfolio-wide strategies, because it kind of makes sense, from an owner's perspective on the one hand. What I've seen in my experience is it is a little risky, because one size fits all, I don't think, ever worked, and it doesn't work now. You're making an assumption that everyone in your portfolio has got the same needs, wants, aspirations, and they more than likely do not. So I think that what we'll see more of is, is an asset by asset approach. The communities within those assets, they care more about their experience in that asset. I don't know how much of that they associate with an ownership structure or the fact they're part of a broader portfolio. They just want that asset to do everything that they need it to do. So, really, it's more labor intensive, it's more costly, but ultimately can be a lot more successful, I think, is if you actually do deliver precisely what that community in that asset needs. You solve the problems that they have that they can't solve within their own tenancy. So that requires a lot more research, hard work. It's definitely less of a vanilla approach that, historically we've gotten away with in the industry, to be honest. I think our kids will have a much better, much richer experience in their workplace in the future, whatever that looks like, if they even attend one in real life. So it's exciting times, but it is very difficult, and it requires a lot of work.
What you said just then about kids really hit home. Just then I'm like, oh man, I got to work really hard to get this right, or help get this right, so that Madden and Logan have a cool office to go to, or wants to go to the office, right? Okay, so portfolio approach is there's no one size fits all. So there's no blanket approach, which I completely agree with. Okay, everyone, I think that's a really strong way to close it off, because I think we've had a nice yarn, and thank you so much for sharing your insights, because
thanks for having me.
A lot of people don't normally get access to a psyche such as yours, who's been responsible for such valuable assets and such big scale decisions. I admire the fact that sometimes when you make a decision, it's not just a small to medium one, it's sometimes tens of millions of dollars worth. So there's a lot of consideration, diligence, and courage attached to it. So I really appreciate you sharing how you think, because I think anyone listening to this, just being able to appreciate how sometimes asset owners think about these problems in this difficult market will serve you really well, even when you think about how you want to communicate to them or how to solve those problems. So less positioning yourself as a product slogger, more of a, okay, you know, I can empathize that this is an issue. Here's how I think we can help it. So thank you.
You're welcome.
And it's always nice seeing you.
Good to chat.
All right. Bye, everyone. Boom.
Done.
Dude, rock star.